Hi, I'm Nate, and welcome to Stratum, the most powerful, versatile tax planning and projection system on the planet. And I'm going to show you just how powerful it can be for you. We're going to use a sample client. This is a fictitious client. He's about 54 years old, and he's married to his dear wife, Jane, who is uh, a couple years younger than he is. There we have Johnny and Janie Johnson. We get a default tax year and a default scenario. More on those later, probably in another video. Let's launch a planning session and see just how quickly we can get down to business. I have basic data entry, which can be done manually, but perhaps more interesting is to do it using an existing tax return. If we go grab Johnny's last tax return, upload it, and then use the AI agent to extract the things that we care about. This can be completely automated in a matter of seconds. We're going to scour the 1040, the Schedule A, the C, the E, the Fs, the alphabet soups to figure out what was in the tax return, grab the data out of it that we care about, and then make a few observations along the way. Now, it should be noted none of the PII in the tax return is ingested at all in any way, and AI is instructed to completely ignore it. So it's not being read anyway, but if you feel like you want to redact those things before you do it, that's fine too. Just do that on the PDF. So here we have the things that were discovered by the AI agent, including observations, professional evaluation, tax planning opportunities, important notes. And I'm not going to go into those, especially where this is a fictitious case. It may or may not matter. What we are going to play with just a little bit is some of the data. All of these things were found in that tax return and can be applied to the plan automatically. We could either append that or override it. And in this case, since there is no data, it makes no difference. It'll do the same thing. So I'll hit append and voila, we have all of our core data in place. This is kind of our concrete data. It is what it is, not assumptions, not forward looking. It's just the reality. And with that, having done nothing more, if I now look over here at the federal tax analysis, I have a complete 2025 tax analysis for that tax return, complete with identification on opportunities, maybe some areas that need some attention, and a review on where they sit in their tax situation. In this particular case, in site number one, they have a little room in the 22% bracket. Now, will that matter? It might. It might not. That's where we get started. Now, here's the thing. Your clients don't operate on an average tax rate. So I'll argue that neither should you. Average tax rate is an output, not an input. Average tax rates shouldn't drive an analysis because they're ultimately the result of the analysis. The drivers are the tax brackets, the phase outs, the incremental marginal parameters that drive real decisions. So rather than treating taxes as an appendage or trying to boil taxes down into an average tax rate, Stratum has a world class federal tax engine at its core. And that's the heart of what it does. And the kicker is that the same world class federal income tax engine that drives the current year analysis also drives every other year of the analysis. This is critical whenever you want to do any real forward looking tax planning. And I'll argue that all good tax planning is forward looking beyond just the current or even the next tax year. If you agree with that statement, you're in the right place. Stay tuned. We'll dig deeper into Johnny and Janie Johnson, and hopefully that'll help you see how Stratum can help you with your clients as well. Thanks for being here.